Welcome to Common Sense Investing. My name is Cameron, and we're here for another weekly live stream talking about my favorite thing, microcap stocks, because this is what I do every week. Good weeks, bad weeks, middle of the road weeks, it doesn't matter. I'm here every week talking about microcap stocks. There's always something going on, good or bad. And you know what? I always say that there's also opportunity and volatility. So some of the bad can also be good. Some of the good can be bad. It really depends on the stock. Thank you for joining me. Right now, we've got quite a few people still coming in to join the program. I appreciate you spending your time here with me talking about microcap stocks. As usual, I have a presentation for you. I don't know, about 20 slides or so, talking about 3 or 4 different stocks this week. But I'll try to go through the presentation. I check on comments every once in a while throughout the live stream. But as what I normally do is I'll get through my presentation, try to keep my mind on track. And then afterwards, if you have any questions, comments, anything you want to talk about at all in the market or talking about stocks, once I'm done my presentation, I'll more than happily stick around for a while and talk stocks. So feel free to drop whatever you want to talk about in the comments, and we will get to that eventually once I get through this. It was actually a pretty good day for a Monday. Especially with a Trump tweet talking about more tariffs. There's some stocks that were in the green today. And at the end of the day, keep in mind that, I have this constant debate with people about the best way to invest. And I really don't think there is a best way to invest in microcap stocks. It really depends on your own personal strategy, who you take inspiration from, your long-term vision, how much capital you're working with, how much experience you have. There's so many different factors that go into microcap investing. That's what makes it such a magnificent place to be because, even though I've been doing this now for well over a decade, there's still so much to learn every day. Different market dynamics. Every time we get any kind of recession or scare in the market, I keep hearing this time is different. And you start going down that funnel of, oh my gosh, maybe this time is different. Maybe I should just cash out of all my stocks and be terrified and go invest in gold. But at the end of the day, I always stick with this, and I always try to keep microcap investors positive, even in bad markets, because I make the most money in a bull market. I absolutely love bull markets for microcap stocks. Do not get me wrong, but sometimes volatility, sometimes even bear markets can turn into really good investing times where you could buy good companies at cheaper prices. And for the longer term investors, this really pays off. And so lately I keep doubling down on this. My advice, turn off the news and focus on individual stocks. There's some well-managed, profitable companies out there at very attractive valuations. And of course, I've been leaning heavily on Ian Castle, who absolutely stunning person to follow and listen to, especially during bear markets. I don't know why. I tend to gravitate to certain investors during bull markets, and then I tend to gravitate to some other investors during bear markets. And Ian Castle, for me, is definitely more of a bear market type investor that I can get along with because of his motivational tweets and texts and everything else, right? Where Ian Castle here says, instead of timing a bottom, you should be slowly adding to the businesses you love. So that's my motivation, getting some motivation from Ian there, as well as, hopefully watching these live streams help to get rid of some of the fear in the market. Keep in mind, nothing I talk about here is, solicitation to buy, sell, or hold a stock at all. I'll talk about what I own and what I don't own, as well as put it in any disclaimers. But I'm not your financial advisor, right? Like, I'm not a financial advisor either. All I'm trying to do is create discussion in some of these microcap stocks because it is such a wonderful place for retail investors to be. This is where we have an advantage over larger institutions with more time and more resources and more education, more manpower and everything else to throw at these companies and invest. They can't invest in microcap stocks. So that's why I'm here, just to talk about this space, talk about some good companies in this space, and hopefully they turn out to be good investments. But I mean, that's always, it's a volatile place, microcap stocks, and you need to know what you're getting yourself into, right? This is what I talked about, recent Substack article. And one of the things, especially for me, that people need to understand, macroeconomics matter to microcaps. There's no way. And that's a tongue twister to say. I said it pretty quickly, but macroeconomics matter to microcap stocks. There's no way around it. I talk about this in the Can Slim book, How to Make Money in Stocks in Good Times and Bad. William J. O'Neill talks about how in the bad times, 3 out of 4 stocks follow the market, meaning that 3 out of 4 stocks will be going down when the market is going down. With microcap stocks, it's worse. If the markets are bad, I think 8 to 9 stocks are going down out of 10 when the market is bad, as well as we start to see a lot of this. And we've been seeing a lot of this lately, right? If there's negative news or disappointing earnings, we're seeing large drops in microcap stocks, right? So you get positive news, you might get this 10 to 20% uptick in the morning, whereas if you get bad news, you're getting 10 to 30% downward crash in the share price. So there's a little bit more downside risk right now. If your company reports bad earnings, you could end up, being down 30% in the morning versus, a company that you like reports good earnings might be up 10, 12, 15% in this kind of bad market. The other thing is for some of these stocks is it retreats quickly as investors takes profits to mitigate risk. One example of that is McCoy Global. McCoy Global recently at Planet Microcap went up to like $3.74. It's back down to, I think, $3.14. An insane pullback after the company just astounds everybody. Really great news, really great press release, company changing press release for McCoy Global, and share price is going down right now. As well as, some microcap stocks report good earnings, but because people aren't watching these stocks right now, too high risk, staying out of the microcap space, even reporting good earnings for some of these stocks, share prices drop. So the main thing I'm saying here is that, be careful. Very unpredictable markets. And what I'm saying is that it's not a great time to be a short-term trader. Shorter trades are really risky where, if you get the trade right, you're up 10%. If you get it wrong, you're down 30%. It looks to me to be like mathematically impossible. So right now, I'm definitely encouraging people to look more long-term. If you miss a shorter trade, are you going to be fine holding that stock for 2 years if it takes 2 or 3 years for the market to improve? Not saying it will, but just in case, if you look at what happened, at the back part of 2021 or during 2022, it took till about 2024 for a lot of those stocks to recover, after the crash in 2021. So it took 2 to 3 years, right? Now, my personal investment strategy, and again, not financial advice, but just what I'm doing, what I'm thinking about right now, basically is exactly what I just said. Any stocks I'm buying this month are going to be ones that I'm comfortable holding for several years should the market conditions deteriorate further. And I'm not saying the market conditions will deteriorate further as well. I'm really trying not to predict macroeconomics right now. Every day in my Discord, I talk a little bit about what's going on in Canada and a little bit of what's going on in the United States. I'd say that Canada is in a much worse position right now. They've had some challenging macroeconomic headwinds. The United States, despite all the threats and tariffs are going to cause chaos, is still getting along pretty strong. So I'm definitely not trying to predict the markets, but I'm definitely trying to manage my risk and protect my capital. I'm not chasing anything, right? Share price goes up. I'm just not paying a higher price because in microcaps, one of the things you'll be noticing right now is we're not getting follow through days. Company reports good earnings, share price goes up 15% that day. Next day it's down 5%, then it's up 5%, then it's back down 10%. Like we're just not getting those consistent 2 or 3 days up 5 to 10% or more like we used to in 2024, right? So I'm not chasing. There aren't a lot of quick wins out there right now for me, conviction in my research. So I'm looking at stocks that I have a lot of research into, high conviction in, coming down to good prices. And, if the macroeconomics get worse, I'm still comfortable looking at them now and holding for a couple years if I need to. So let's talk about some of these stocks that we're looking at here, right? Interesting comparison for me. Enterprise Group today. I actually, after saying all this, I did take a trade on Enterprise Group today. I bought it at $1.49 this morning, and I sold it at $1.62 and made a pretty good profit. This is the little kick up that we saw here. And the whole reason I did that is because I knew that I thought Jordan Zinberg was going to talk about, from Bedford Park Capital, was going to talk about Enterprise Group on Market Call on B&M Bloomberg today. So typically every time Jordan talks about Enterprise Group on Market Call, share price goes up. I don't think he did today, but they did get mentioned again as last month's top picks for Jordan Zinberg. So I think that's why price went up. So I made a little bit of money on them today, but they have been going down compared to McCoy Global. So back down, I think I said 314. They're now at 311, at least when I took this picture, and just can't seem to hold a price. You see McCoy Global now, this is arguably the second or third time, depending on how you want to look at it, fourth time even, where basically share price has gone up and now it seems to be trailing down again. That's pretty frustrating. And let's take a look at these companies and what they're doing right now. So Enterprise Group, for me, one of the concerns. I know a lot of people talk about the potential rewards of these companies. I just want to make sure that people are informed on some of the potential risks, right? Oil and gas services company recently found success by reselling natural gas powered turbines, right? So they're not oil and gas, but they're very much affected by the oil and gas economy. They operate primarily in Alberta, Canada. Right now, the price of oil, right? It looked like it was going to rebound there for a little while, went down to $57, bounced back up to about $63, $64. Oil production, OPEC's going to release more oil. Potential global recession still being discussed. Oil's down now to $57 for Enterprise Group. Oh no, somebody's saying my sound is off. One person's saying my sound is off. I can hear myself on my headphones. Yep, I'm hearing myself fine through here. So that might be you. Sorry about that, a person, but if anybody else has any problems, I'm hearing myself in my own earbuds here just fine. So let me know if my sound is still off. But one of the things here with Enterprise Group that I put in my recent Substack article, right? Some of the risks, oil's below $60 again. And there we go. Antoine, thanks, can hear me. Tariffs have also created confusion, right? So oil and gas tariffs have brought up in the media as a negotiating tool in trading discussions. And you also have to consider that Enterprise Group operates primarily in Alberta. So geographically, it's very a small location that Enterprise Group operates in. And there's also, I don't know if you saw it today, Daniel Smith, the Premier of Alberta, just had a press conference, and they're talking now about potentially a referendum. And Premier Smith said maybe sometime in 2026. That's kind of an uncertain business environment for capital investment when there's so much change going on. And then again, talking about Enterprise Group operating in Alberta as well as Fort St. John, BC, there's already forest fires out there. So they've already actually had to evacuate Fort St. John. They're back in there, thankfully. The town is fine as far as I'm aware of. And then I saw today that there was a fire just outside of Grand Prairie. Grand Prairie is where Enterprise Group is acquiring a new company. So a lot of challenges here for Enterprise Group, especially interestingly enough for a day when they were up 8%, right? These challenges aren't going away. I wrote this about a week or two ago. Price of oil is lower. Tariffs are still existent. Alberta's having some challenges still right now where investment might be a little bit slow. And then forest fire season looks like it's getting kicked off. We're getting no reprieve from that for sure this year in Enterprise Group, right? So yeah, perfect. Everybody can hear me. Thank you. So it's just one person. Thanks for commenting on that. I thought I was doing better here. So if we look at it here, right, this is where Enterprise Group operates. There's already been 14 fires. There are 3 wildfires burning near Fort St. John. This is one of the new operations that Enterprise Group was expanding into to capture more of the gas production up around Fort St. John for the shipping out to Kitimat for the new pipeline, right? And now here they're talking about Grand Prairie, forest fires in Grand Prairie. And this is where Enterprise Group is expanding with that acquisition of Flex Energy if it goes through. So these guys just can't catch a break with the fires, as well as this is what I was talking about with the price of oil, right? Latest hike of more than 400,000 barrels per day. Saudi Arabia warns of further increases may follow, and some analysts are saying that if that happens, could push oil prices to the low 50s. A lot of these companies break even, somewhere between $50 to $70, depending on the quality of the company. Arguably high 40s you could get by. We get to the low 50s, there's not going to be a lot of drilling, right? At least not for oil production. And especially considering, some of this other volatility that I've been talking about here with oil, with Alberta and investment in Alberta right now. So the other thing is, in Alberta, they just today, Sunico is buying, is it Parkland? So that's an American company buying the largest fuel distributor in Canada. It's kind of shocking. But I mean, you look at that, it's interesting because Enterprise Group is up despite all the concerns I'm talking about today and making money on them today. McCoy Global is going down. So one of the things that interests me why that would happen, because, Enterprise Group is very local towards Alberta, Canada, and there's a lot of volatility there. In fact, might as well bring it up now because I'll talk about it when I'm talking about NTG Clarity Networks later. But it's amazing how volatile North America is right now, right? It's fascinating that I'm going through these microcap stocks, and 2 years ago, if I saw this type of income, oh my gosh, $20 million of revenue out of Middle East and Africa. This is volatile. They might lose this at any point. And now I'm going like, oh, these companies need this right now. These companies need this. I'm looking at the United States and I'm looking at Canada. I'm looking at you and, looking at this revenue and just going, is this revenue safe? I'm actually more concerned about some of this United States and Canadian revenue than I am the Middle East and Africa revenue. But my point is, this chart here is for McCoy Global, a diversity, right? Compared to Enterprise Group operating in Alberta, Canada, basically a little bit in BC, but very narrow geographic region versus, McCoy Global, share price is going down and they have all this diversity here. So it's just something to talk about as far as, when share price of a company goes up, I always talk about how there's actually more risk in most cases. When share price comes down, I expect less of a company. When share price goes up, that's when investors start expecting more of a company. So it's interesting to me right now that share price of Enterprise Group is going up when really my expectations of Enterprise Group aren't very high right now. And so that's kind of contradicting what's happening with share price. And then I look at McCoy Global, share prices coming down, and my expectations of them are still pretty high because I think they have a lot of ways to diversify their revenue and continue to grow, even at a $57 barrel of oil and natural gas, of course, right? So, comparing and contrasting these two companies a little bit more, and this is fascinating to me because these are two Canadian oil and gas services companies. They have so many similarities, yet they have so many differences. And they're so much on the same track right now, or at least recently, especially because company changing stuff is happening with these two. Enterprise Group, one of the reasons that their share price has been up recently, they were down to like $1.20 something Canadian. They're now back up to $1.60 Canadian, right? They announced this agreement to buy Flex Energy Solutions. So this is the company that has been supplying them with the natural gas turbines that has been rocketing this share price up for Enterprise Group and really the future of this company. Before Evolution Power Projects and these natural gas turbines, Enterprise Group was a great company. They've been around for a long time, but nobody was looking at them as a high growth banging stock, right? Until this became a thing and people started getting excited. So now what's happened is Enterprise Group has an intention to buy this company, Flex Energy Solutions. It's going to give them 17 more turbines, as well as it says a platform to which to add their 2 megawatt unit. So I'm assuming they're also buying the IP. They're getting some contracts along with that. And as well, they're getting the full sales exclusivity in all of Canada. So I don't know if you remember previously, they had signed an agreement with Flex Energy to be the exclusive providers of these natural gas turbine systems in Western Canada. And now it's going to be all of Canada. So that is good for them, great for them. And it's driven their share price up 30 to 40 cents, right? So that's excellent. You look at McCoy Global, they're not far behind here, or if anything, they're ahead. Recently, they spent a bunch of money, integrated all of their wonderful products that have been selling well for a long time with a smart TR system that enables software as a service revenue. And they recently announced right at Planet Microcap $11 million of contract awards for their smart TR hardware, right? Including the contract includes utilization-based SaaS revenue for the system's remote integration and automated operational capabilities. So not only a large contract, this is company changing because it, at least in this one contract, legitimizes that they have product market fit. The company that has been testing out their smart TR hardware likes it enough to spend $11 million on it, right? So this is huge validation for smart TR, where, speculative before this contract makes it much, much less speculative. And we, as investors, tend to expect more contracts in the future. So that's what's been going on. Enterprise Group going up. McCoy Global's been going down. And I'm not sure that's fair, given what's going on. So I see somebody here, Cam, the market loved the acquisition Enterprise made last week. The stock has been steadily rising. Yes. And hopefully it works out for them. There's still a lot of questions. Look, I think this acquisition was great for Enterprise Group. Don't get me wrong. When I look at the math of it, these turbines are cost basically, I think it's around $1 million US each. And for what Enterprise Group paid for this acquisition, or at least proposed to pay for this acquisition, they basically bought these turbines and the leases that go along with it. And they get that facility in Grand Prairie, looks like basically for free, right? Now, I'm sure that facility is rented and not owned. We'll find out later on. But that's what it looks like to me, is basically they bought Flex Energy Solutions Canada for the price of the turbines and leases. And, they got the facility and the manpower and the IP and everything else for free. It is a very, very good acquisition. My concern right now, I got to say, my concern is these will be on lower price contracts, because Flex Energy was servicing, I believe, smaller companies at lower costs than Enterprise Group. So my expectation is that this isn't a huge amount of money coming in. Now, once they go to renew the leases on those turbines that are out there on lease right now, they'll be able to raise the prices, and that'll be good. The other thing is, I could see, salary and expenses going up with this acquisition, because they're going to need to keep this, intellectual property. They're going to need to keep the staff. I don't think the Enterprise Group staff know how to build these turbines, right? So, or service them. They're going to need to pay people to stay in that Grand Prairie Flex Energy Solutions location. So there is some volatility coming forward with this acquisition, though it still looked pretty good. It's a lot of money. It's a lot of risk. But I mean, overall, I think it's still bullish for the company. My bigger concern, though, right now, again, going back to it, is are companies going to be buying these turbines? Potentially. Go look at my Substack article. I give some reasons why. Some of the companies will still be leasing out these turbines. One of the main points is that Canada just elected Mark Carney as Prime Minister. He's kind of an eco warrior. So I could see there's going to be increased pressure on a lot of Canadian companies, Alberta companies especially, to be lower emissions. So it's definitely a great thing for Enterprise Group to be offering, lower carbon natural gas energy producing turbines. But I mean, there's still some risk moving forward, and there's still some macroeconomic challenges, right? Moving on from those two good companies, I do have to point out NTG Clarity Networks in my recent, it's free now. This was a paid article where I covered some of my top stocks heading into Planet Microcap. Interestingly enough, my first one was McCoy Global. My second one was NTG Clarity Networks. Fun times, because I was quite disappointed with not their performance. I thought they did a good job. I was quite disappointed by the thought process or the uptake of investors, microcap investors, looking at NTG Clarity Networks at the Planet Microcap Showcase. I know I captured this comment here, and I completely believe this person. Only other 5 to 6 other investors in the NTG Clarity presentation. So not a lot of people were at their presentation, saying nobody really cares about this business. It's a 10-bagger. It guides for almost no EPS growth in 2025. The market considers this to be enough said. And I mean, the share price of NTG Clarity Networks has done extremely well. And this is a 1-year chart and has really retracted recently. So I have to say I was pretty disappointed, and not from these comments. Like, I love when people make comments. I'm not slamming this at all, other than I really appreciate the information that there wasn't a lot of investors at the NTG Clarity presentation. That surprised me. I thought this would be a company that a lot of people would be excited at looking at. They're profitable, they're growing, they're consistent. And the other thing with NTG Clarity Networks, again, they have no exposure to tariffs, and they have no exposure to the North American volatility. So, during Planet Microcap, to see share price go down and volume go down and nobody excited to buy the stock was pretty disappointing, right? Thank you, Jordan Zinberg from Bedford Park Capital. Absolutely love it. So it's nice to see on my first slide when I talk about, you just have to have conviction in your stocks. When I'm talking about my personal investment strategy in May, conviction in your research will be essential. It's nice to be able to go through, Planet Microcap and not seeing my research be validated by other microcap investors. And then basically, a week or two later, they make BNM Bloomberg market call. You could see share price up significantly, volume up significantly, and NTG Clarity Networks was a top pick for Jordan Zinberg at BNN Bloomberg. So it got a lot of attention. Now, you remember one of my other top picks that I'd been covering for a while and then was covered by Jordan Zinberg, and that was Enterprise Group. And I mean, Jordan, I think, covered them not even on this chart. He covered them down here at like 80 cents, and share price went up to like $2.25. So this type of exposure has the ability in a bear market, in a bull market, to really drive up the price of a stock significantly. Now, I'm curious to see what this type of exposure does in a bear market. Like I've been saying, there hasn't been a lot of follow-through days. We haven't seen a lot of companies go, 2, 3, 4 days in a row with a positive share price and volume. That's unfortunate. So when Jordan mentioned Enterprise Group in a bull market, it absolutely shot up for like 2 or 3 straight weeks. I don't expect NTG Clarity to do that, but it would be nice to get them. We're starting to see, again, this is the 1-year chart, right? Higher highs, lower lows, higher lows, higher highs. That's exactly what we want to see until the whole Donald Trump debacle. And now we got Jordan Zinberg coming into the rescue. It would be nice to see another higher high at the very least on NTG Clarity Networks. And really, this, again, comes down to conviction here, because I get really tired of sometimes anonymous stuff online. That's why I don't go there. I don't read a lot of anonymous comments. That's why I opened up my own Discord to talk about stocks and, have some good people talking facts and not speculation. And if you're going to be bearish on a company, provide a reason. Because this was frustrating me with NTG Clarity Networks, basically that people were disappointed in this. They were disappointed in their outlook. 2024, they reported 56.1 million in revenue at 22% adjusted EBITDA margins. Their guidance for 2025 was 75 million, so really good growth. However, they forecasted a little bit lower adjusted EBITDA margins because of the cost of the growth and because this company does like to be conservative. Like, I would not be surprised to see NTG Clarity come out of the year with 20% margins or even 21% margins, and it's pretty close to this year. But sometimes their growth has unexpected costs to it, and they, reasonably are conservative in their numbers and their outlook, and people were disappointed in that, and share price has been going down. This company has been doing nothing but executing. The other part of my research that I really liked NTG Clarity Networks on as well, that isn't discussed enough in my mind, is I know people talk about the risks of the Kingdom of Saudi Arabia and everything else like that. You know what they don't have? This gentleman right here cannot tariff them in any way, shape, or form. Right? There's no affiliation for NTG Clarity Networks. There's no possible way that Trump can put out a True Social post saying, I am going to tariff this industry and it will hurt NTG Clarity Networks. They have zero exposure to North America. Yes, they're headquartered in Toronto, Canada, but their revenue is made in the Saudi Riyal, which is pegged to the USD and then transferred to Canadian currency. You got to look at the currency factor a little bit. Changing currencies can affect their earnings a little bit. But I mean, at the end of the day, when we're talking about risk, I was wondering how long it would take for people to notice that a company with growth like this, growth like this and profitability like this with absolutely zero exposure to the chaos in North America right now. I was wondering how long people could go before noticing this company, right? Mr. Zinberg should be the U.S. president. I'll be happy with anybody who gets, attention on microcap stocks. You know how Trump can make it up to us all is we just need a post saying, you know what? He loves the innovation and drive of North America's smaller companies, and he recommends that all investors go invest in your local neighborhood microcap stock and you'll get a tax rebate, something like that, right? That's what we need. An apology for crashing the microcap market is a Donald J. Trump post about how Americans need to buy microcap stocks and he will give them a tax rebate or American citizenship or something. No tariffs if you buy microcap stocks. Something. He needs to do something to apologize for the portfolio that a lot of investors have this year due to that gentleman, right? Probably the last stock. I got two more on the docket. I might just cover one. We'll see how much time we have here before I get to questions and answers. A gatekeeper system. Interesting for me because, I have been waiting for share price to come down a little bit. And again, it spiked up today. That's interesting because lots of times we see when gatekeeper spikes up in share price, it seems like, other investors have information that I don't have. So sometimes, kind of makes me wonder if there's news coming out that I'm not aware of. Overall, though, I keep waiting for price to come down. It's already down 36% in the year. The opposite of NTG Clarity Networks right now, we're getting lower highs, lower lows, really not good for the stock. And we keep getting a little bit of hope here, like we got recently, up 4 to 5%. Justified based on the financials, right? This quarter, fairly disappointing, 5.9 million revenue. 3 out of the past 4 quarters have now had a negative EPS because what's going on here with gatekeeper systems, and I talked about this in my recent article, is they're still spending for growth. So they're actually increasing their expenses here has still been, stable and or going up as they spend money on marketing, they spend money on research and development, they keep staff around, they keep hiring people, right? There's no indication that Gatekeeper Systems is planning to slow down at all, other than the fact that their revenue has been slowing down recently. And because of that, they're into the negative profitability. So that's concerning. And that would make sense as to why their share price has been down over the last 12 months. I did point out recently, on top of what's going on, though, basically the company operating for growth or looking like they're operating for growth. This is the one thing that some astute investors picked out of their earnings that is worth talking about. They have a letter of credit facility. It was previously $2 million. That has now been increased to $7.5 million. And Gatekeeper Systems, for the most part, when I go look at their earnings, they do a lot of copy and paste. This line was put in there intentionally. So when I go read their earnings every 3 months, I kind of fall asleep sometimes because it's the same stuff. This was one of those lines that was different, basically saying this increase in the letter of credit facility was to accommodate potential inventory purchases and performance bond guarantees for large projects. And that has got people excited. That is why share price is up a little bit, right? Gatekeeper has cash 8.4 million. They got working capital 16.1 million. They just increased their letter of credit facility by, substantially. They increased it by $5.5 million, right? So, it's been down, but a little bit of life lately. I wonder what price fair value would be with Gatekeeper Systems right now, because they are, sorry if I go back, $41 million market cap company, and they are on track. Well, if you annualize this quarter, $41 million market cap company, and in 6 months, they're only at 13 million of revenue. So 26 million of revenue and $41 million market cap. So people are paying for a little bit of growth. The company is running like they should get a little bit of growth. But this is the thing that's interesting to me when you add it all up, right? Gatekeeper's continuing to operate the business as though growth is expected. Normal expense growth in salaries, research and development, no attempt at expense reduction. Remember before, when growth was slowing down, they actually cut costs. This time they're not cutting costs. So that's interesting to me. They're continuing to hoard cash. There's no hint that this cash is expected to be spent on acquisitions or share buybacks or dividends. It's just there to fund growth. And then they increase their credit facility in addition to their larger cash position, explicitly stating it's for large potential contracts. So, Gatekeeper Systems, I have some questions. I do call it a game, gambling or a game of chicken right now, because, if you look at their financials, their share price should be going down. But if you look at the potential of them taking advantage of this situation with tariffs, where over the past few months, a lot of governments in Canada have said that they are going to prioritize contracts from Canadian companies over international or American companies, I do have to wonder what potential that has for Gatekeeper in Canada. So in the past, one of the frustrating things about Gatekeeper Systems is they haven't landed any new major large contracts like they had with SEPTA, with the city of Philadelphia. And the reason for that is because they can't compete against private industry, because private industry doing the same thing that they are don't have shareholders that hold them to account for margins. So a private company can go in there and bid out a job and make very little money, and they're fine with that because they don't have shareholders to answer to. So Gatekeeper Systems has been struggling to get larger contracts. They've had to focus on a lot of these smaller companies to go raise their revenue. And this time I wonder if, they seem to be planning on another large contract coming up. But it is a gamble. It's a game of chicken, because again, they could have this press release tomorrow where there's the huge new contract driving up share price. Could take 6 months, could take a year, might never come in. We don't know. They're just operating the company like they expect it's going to. But on the same side, right, the share price right now, valuation, it's pretty healthy for a company that's basically been trending downward in profitability. and going in the wrong direction, right? So interesting times right now for gatekeeper systems. Interesting times right now. What happens with NTG Clarity Networks? And then interesting times for me looking at these two companies. And, right now I'm a little less bullish in Enterprise Group and I'm a little more bullish in McCoy Global. And they're both oil and gas services companies headquartered in Alberta. But you got to look at the details, and it's interesting that they're still very different companies. So that's the end of my presentation. Time for questions, concerns, comments. What do you have for me? I have some time to talk. Hopefully people can still hear me and I'm not just rambling on to nothing. But those are four of the companies that I kind of wanted to cover in today's presentation. I hope you enjoyed that. Some big news, company changing news for McCoy Global, company changing news for Enterprise Group. Congratulations to both those companies, right? That's absolutely huge news for them. Let's see here. Covalon has been very stable. Trend is turning north. Yeah, look, there was a time there when Covalon was like testing, 220, 215 Canadian, and I was looking at it thinking, I was actually wanting to buy some Covalon, and then I was looking at it wondering if it was going to drop lower, drop to $1.80 or their next bench down for support, and it didn't. Covalon, stabilized there at, I haven't looked at them recently, but I remember they stabilized at around what, $2.30. So we'll see if they're still in that range. Yeah, $2.37 for Covalon. So they've stabilized a little bit. Curious because, what stabilized their share price was coming out and saying that tariffs were going to help this company because their Canadian manufacturing was still covered by CUSMA and there would be no tariffs, while the tariffs on Europe was going to tariff their competition. And that's number one, what stabilized share price, and it actually drove their share price up. Well, that's kind of fallen apart because there's been a pause on the European tariffs. So I don't even know when that pause is over. I think they still have a couple months to go. But it is interesting that what stabilized them was a tariff pause. And but it was one of the few companies where tariffs was going to help them, right? MCB is a good company. So McCoy Global is a good company, but like everyone is saying, it takes time for companies to adopt to a new tech. It's much more of a 2026 story. Yeah, that's what I keep hearing. I somewhat disagree because I don't think this is their only contract that's going to come in 2025. I think the numbers are going to significantly improve on McCoy Global in 2026. So completely agree with you there. But I think what's going to happen in 2025 is the press releases. We're going to get the contract announcements. Now, the real problem there is that if this was a bull market, those press releases would be enough. They would be enough. Share price would be up. Share price would be staying up. Everybody be high-fiving and celebrating. The problem is we're in such a bear market right now. On top of that, potentially an even larger bear market for oil, with oil down so low. I know McCoy Global has a lot of people misunderstand the company. They have a lot of opportunity with natural gas. But I mean, most investors, especially retail investors that are owning McCoy Global, won't be looking at that. They'll see all the negative headlines, oil and gas problems, $57 oil, drilling is down. They'll see that as negative for McCoy Global, and that will affect them. I'm not saying it won't. But the problem, I think, with 2025 is we're just in more of a bear market. We're going to get those press releases this year. It is a 2026 story for when we should see exponential earnings growth. But I mean, shit, 2024 wasn't bad either. What did they have? 28% growth in Q4. So, they're paying a dividend, 3.2% based on recent share price as well. So they're paying us to wait. They're doing share buybacks, and the earnings are maybe more of a 2026 story for sure. But I'm pretty happy with them. Mr. Zimberg's other top picks and absolutely loves Propel Holdings. Your comments, please. Leaving that one to him. I'm not researched on that stock at all. I might go take a look at them. He kind of convinced me on him a little bit. But the problem is that one of the things that you'll see from my channel is I'm trying to find stocks before Jordan does. That's my goal. That's my game as a small retail investor. I found Enterprise Group before he did. It went from 40 cents to 225 before it pulled back. So my goal as a retail investor is to find these stocks before the rest of the market does. So Propel sounds great, but it's already kind of discovered. I know it's kind of discovered into the, the small cap stock type neighborhood where there's still potential more discovery by other institutions and larger institutions. And that should still get me excited and is potentially still a great investment. But my channel, this channel, I'm typically looking for those tiny little, tiny little companies, $50 million market cap. What is Propel? I'll just go look at them anyway, just to take a quick look. Let's put them up here, put Yahoo up there, and go here, go to Propel Holdings. What is their market cap? Yeah, so we got hard to see. I got to zoom in a little bit for you because this is, there we go. That's a little bit better. So $1 billion company. So that's not typically something that I'm looking for on this channel. It's into the small cap stock. So not something that I would personally look at. $30 share price, $1 billion company. Could be fantastic. Don't get me wrong. Oh, share price sure has been kicked down. Only recently reminds me of NTG, right? Down pretty good from the highs, and then mentioned by Jordan Zinberg, and all of a sudden it's up again. But yeah, $1 billion already somewhat discovered. What kind of institutional ownership does it have here? 6%. So yeah, you know what? If you're looking for a small cap stock, definitely. I mean, looks okay. Look at the growth on this one. 449 million revenue, 34% growth, a lot of debt from the looks of it. So a lot of things to go look at here. But if you're looking for a small cap stock, that could potentially be a good one. Just not for me. I'm a microcap channel. I'm looking for the next company that Jordan discovers, right? So zoomed interview on small cap discoveries came off positive. Did you listen? Thoughts? Yeah, we knew it was positive at the time because that's about a week before Planet Microcap is when that, when you pay for small cap discoveries, you see those interviews 2 weeks before they go public, right? So that is the biggest, best value proposition for small cap discoveries. When you pay for their service, they do usually 2 interviews per week with companies. It's the type of service that I simply don't have time to do. Like they have a team of people working at this full time. You get access to their interviews, and those interviews are held by small cap discoveries for 2 weeks until they're put public. So you could see the price of Zoom go up during the small cap discoveries private interview. And then once it came out public, it actually came out public after their Planet Microcap interview. Both interviews at Planet Microcap and at small cap discoveries were positive. I've listened to both. We know why they're positive because the share price is priced for negative growth. The share price of Zoomed is priced for a bad to really bad 2025 earnings due to Chinese tariffs and the trade war. A lot of their customers are probably, Chinese customers. We know, or at least speculatively know, everybody kind of the hidden secret is that their number one client is Shine, the Chinese company. We also wonder if Temu is in there and whether a large portion of their customers are actually originating from China, and that the tariffs on China and the trade war between China and the US can significantly impact Zoom's earnings this year. The thing is that the CEO came out and said, no, that's not really true, because with our customers, even if revenue is down, for example, in the United States, that doesn't reduce their contracted revenue, in that they'll take that money that they would have spent in the United States and they'll put it in Europe, or they'll put it in Asia Pacific, or they'll put it somewhere else. So they're saying that 2025 might be a challenging year, and that I believe the CEO said he expects somewhere between 10 to 70% growth. They already put in 100% growth in Q1, right? But the CEO has said 10 to 70% growth, leaving that. I think it was the best thing the CEO has ever said. It's reasonable. I know it's a wide margin of outlook, but I mean, he's saying, look, if we have a bad year, we're still going to get 10% growth. If we have a really good year, we'll be closer to 70. And so, yeah, investors took that as positive, as they should. My bigger concern with Zoom is that every time the share price goes up, the share price goes down. There's massive unknown selling pressure on Zoom's share price. Don't know where it's coming from, but every time the share price goes up, it goes back down. Free cash flow yield on Gatekeeper is very attractive. Cash on hand, cash on cash investment is good. EPS and GAAP is judgment. Cash is real. It's always been a well-managed company, and that's why I'm pointing it out to people that I believe, this is just my own personal opinion, go do your research, but I believe if Gatekeeper thought that they were really slowing down, that if their revenue was really going to go down for the next little while and they were facing challenges, you would see them cutting costs. They've done it before. They're a well-managed company. They're very frugal. When they've had challenging times before, they've managed to cut costs. Right now, they're not cutting costs. So Gatekeeper is a weird stock to look at right now, because their earnings are trending in the wrong direction. Their share price is going up. And it is because people see that as well, what I'm seeing, and they're thinking, is the company getting closer? When is that next contract coming in? They're managing their cash. If you take out the SEPTA money, they're still growing at 18%. I don't really like that argument, but it is what it is, right? So what's my thoughts about Hash? Well, I mean, everybody's disappointed. I'm kind of happy about it, to be honest with you. I'm not happy with the share price going down. But when Hash closed Delta 9, everybody was thinking, okay, let's see what this company can do. Let's see what these earnings are going to look like now that they've made this acquisition. And basically 2 weeks after they closed the acquisition of Delta 9, they announced the acquisition of Cannabis. And I previously looked at Cannabis, and I kind of thought they're a shitty company. I wasn't a shareholder. I didn't buy shares. I wasn't that interested. I did my research and threw it in the garbage pile. So I was interested when Hash came out and said, we're going to acquire Cannabis. And it's like, okay, well, they have information that I don't have. Some of what they talked about Cannabis in the interview that they did kind of surprised me at how good this company was supposed to be, when I didn't really see that in their earnings when I looked. And then the deal fell through, right? So I'm actually kind of happy the deal fell through, because they seemed like Hash was getting so aggressive. It was hard to keep up with the company, how much growth they were going to get versus how much share dilution they were going to get. The problem with it is it creates a lot of questions, right? With Hash is, what happened? Did they not do enough due diligence? I'm not saying I know Cannabis is finding excuses to get out of the deal. I wouldn't believe anything that they say. My bigger question is kind of what happened to the due diligence? Was there enough due diligence on that? Like, how do you go to acquire a company? They raise $4.4 million in convertible debentures and then bail on you? Like, you got screwed, right? So, and sometimes that's not your fault, right? You got to give credit where credit is due, man. Sometimes scammers just catch it and there's nothing you could do. But at the same time, as a shareholder, I am a shareholder in Hash, you expect due diligence to be done. You expect a certain amount of, professional integrity from both companies. And we didn't see that. My biggest concern with Hash right now is I'd like for them to put this behind them quickly. Find a way to distract the market. They got to get their earnings out. I know they're late on earnings, and that was the other thing, is like they have a problem with their last acquisition that's delaying their earnings. And now they have a problem with their future acquisition that's now terminated because the company bailed on them. So you got a problem on the back end, you got a problem on the front end. I know people are screaming, buy the dip, buy the dip. Make sure you're comfortable with that, because there's a problem on the back end, there's a problem on the front end. I still own shares, I haven't sold any. I still like the company. But yeah, there's a lot of drama right now. I'd like to see them get this resolved quickly. I don't want to see this draw out for a long time with people talking about it. Put out a statement, put it at the bottom of future press releases. If you have any updates, move on, put it behind them. CNO finally starting trending upward again. Yeah, good for them. And maybe I'd take it as a trade or something. I like California Nanotechnologies. What are they up to now? I'm not really willing to pay the price for them. 52 cents Canadian. They're up 4% today. The lowest they got was 48 cents Canadian. I just don't know that I'm that interested in them. There's too much volatility around that green steel company. What's happening there? They talked about how they were going to, this is another question that I have for California Nanotechnologies. They talked about how they were going to open up a separate division just for that green steel company, their largest customer. And that got their share price up because people said, wow, we were worried about macroeconomic headwinds and that their largest customer, reducing their revenue. And we don't have to worry about that anymore because California Nanotechnologies is talking about opening up a facility just to service their largest customer. So things must be great. And then 2 weeks later, California Nanotechnologies comes out and says, it could be a tough year because our largest customer is actually facing some macroeconomic challenges and might be ramping their revenue down a little bit. Right? Like, that's what we expected. That's what we thought. But that first press release coming out saying, no, we're going to open up a new facility kind of, led investors to believe that things were better than they were. And then it wasn't, and share price dropped again. So it's good to see some, it's trending up, but it's not going to be a stock that's very high up on my list right now until I see something change for California Nanotechnologies. How much lower they can go, that's probably one of the reasons they're bouncing up again, because if they were going to go down any lower, their next support bench was around 40 cents. So if share price drops, it's going to hit 40 cents. That's pretty low for California Nanotechnologies. Even with my concerns, if they drop to 40 cents, I'd probably be buying some shares, right? My question with Cal Nano is, why is price going up? What's changed? I haven't seen anything change. So question there from me. New press release from Roof today. That's North Star Clean Technologies. They got through their second milestone at Calgary and the commissioning is going as planned. Yeah. They got $4 million, which covers the expenses of Calgary plus some extra for future facilities. Yeah, absolutely. That was great for them. $3.9 million grant that North Star won. That's $3.9 million of dilution that they don't need from retail. We don't have to, not saying we don't have to worry about dilution, but that's potentially $3.9 million less dilution that thanks to a grant. So that's a lot of the times good for Canadian companies. There's lots of grants out there. That's why a lot of these companies are in Canada, or at least headquartered in Canada, is to take advantage of all the Canadian free money. Out of years buying Gatekeeper shares, I'm at a point of just hoping a buyout. You think they would be a target? Yeah, Gatekeeper is a target for sure for a buyout. It's probably a little bit too early. I think especially if they landed a large new contract, I think for sure they'd be a buyout because that would significantly increase the buyout price if they had that large contract, right? Like what's happened this year, the reason revenue is down, it's not technically, it kind of is technically down, but the reason it's down is because last year they had one-time revenue from that project from SEPTA, which is basically the city of Philadelphia. So revenue is down because that one-time contract is gone, right? So that revenue is gone this year. In the meantime, the core of the business, the smaller companies that they keep building up the revenue in, they say that's growing 18%. But I mean, if you're looking at acquiring Gatekeeper Systems at this point, market cap would be a lot lower than what the company would like, because the buyer would be looking at, okay, you just put in a quarter of 5.9 million revenue. That's your core business. Your core business is growing at a maximum 18%, 26 million per year, growing at 18%. That's not the type of buyout situation you want for Gatekeeper Systems. What we want is land another big contract, secured money for the next X amount of years, then go for a buyout. Because then you could say, look, we're not a $26 million a year company growing at 18%. We're a $50 million per year company in 2026, growing at potentially 25% or more. Much better buyout potential. So it's unfortunate how Gatekeeper's fate, and that's why I said on that one slide there, it does feel a little bit like gambling right now, in that, share prices may be high given the financials, but you got to have faith in the company that is looking like they're getting closer, or potentially the odds are in their favor for a larger contract finally coming their way, right? Zoom Technologies, yeah, zoomed NLH up today. Have you looked into them lately? No, I haven't really looked at Nova. That's Nova Leap Health. I haven't really looked into them. Look, I love the company, Nova Leap Health. Love their CEO. Love what they do. They're finally acquiring. It's a home healthcare company, right? Private home healthcare. So it's not really super funded by government. Basically, if you have family members that need help in any capacity, from live-in care to just occasional care with certain conditions, you could hire Nova Leap Health to come help your family. It is one of the best good companies that I've ever seen in the stock market. Like, a lot of their shareholders are people that have used their services, that have helped their family members, and the people were so, amazed at how well Nova Leap Health did. They found out that this company was a publicly traded stock, and they said, look, I'm going to invest. Like, that's how good of a company this is. It's really hard to look at the business model and get too excited. I think they're undervalued. I think they're going to start getting some growth. I think their share price should go up a little bit. But typically my criteria for my channel is 25% or higher growth if possible, or 25%, net income growth if possible, some kind of major inflection point or catalyst, and looking at a stock that potentially could 2x in 2 years or less. Nova Leap Health really doesn't meet my criteria on their business model for that one. So absolutely love the company, but yeah, they have some struggles here. What are we talking about? ACU.V got some grants recently as well. Aurora Solar Technologies. Hard pass for me. I'm just not into solar stocks, and I apologize. If Mike Clark reached out to me, the CEO is at Revolve Solar now. I haven't responded to him if he watches this at all, and I think he might. I apologize, Mike, that I haven't gotten back to you. I'm so bearish right now on the solar industry. This company here that we're talking about is Aurora Solar Technologies. Got some grants, 1.5 pennies, down 25% on the day, down 66% in the year. It's just not a company that meets my criteria. And, the problem with solar is it's not a failed technology yet, but it's really struggling. Keep in mind, potentially going into recession in Canada, definitely going into recession in Canada, in my mind, potentially going into a recession in the United States. I'm less certain of that. Trump isn't very bullish on solar. Chinese tariffs, where do you think all of our solar panels come from? But China, there's so many challenges, supply chains and logistical challenges for solar stocks, that I really haven't seen a solar company yet that's had a business model that I liked. I mean, the one people made me pick a solar company a couple years ago because it was so popular and green energy was the way to go and the future of the world. And I ended up picking Solar Alliance Energy, and it didn't do so well. Let's put it that way, right? That was the best solar microcap stock that I could find, and it's done absolutely horrible. So not my favorite. Avocor Health. Everybody's talking about Avocor Health right now. Avocor Health was operating in Canada with their new technology. One of the largest customers was Shoppers Drug Mart. We started to see in earnings that the money wasn't coming in. What Avocor Health was saying, look at all of our products in all of these Shoppers Drug Mart stores. Aren't we amazing? Share price went all the way up from like 4 cents to like 30 cents and made people a ton of money, right? And all these products were going all across Canada in Shoppers Drug Mart. And then Shoppers dropped them like a hot potato. Share price went from 30 cents to 2 cents, absolutely crashed. And then all of a sudden, Avocor Health gets this new deal in the UK. So without needing too much cash, they take all of their products from Canada, move it to the UK, and now all of a sudden we're getting the same narrative from the company. Look at us. All these products are going into the UK. The UK loves us. Everything's working out great. Growth is better than ever. Trust us, bro, this time, right? It didn't work out with Shoppers, but it's now working out in the UK. If it does work out in the UK, great. Because I'm not saying that, I'm not calling them a shitco. Maybe, it wasn't their fault what happened at Shoppers. Things change, companies change. It wasn't maybe they've learned from their mistakes. I would say be careful though, because one of the problems with a stock like Avocor Health is a lot of people bought shares at 10 cents to 30 cents and they're massively underwater. There's a lot of bag holders out there. And when there's a lot of bag holders in a microcap stock, they want absolutely nothing more than to convince other people that it's the greatest company on earth, to drive up the share price so they could unload their bags on you or somebody else and they don't lose money. Because remember, you don't lose money until you sell. So personally, I'm not touching Avocor Health until I see that, this time the numbers are matching what they're saying, because it didn't match in Canada and they crashed. I need to see the numbers play out in the UK. At the same time, I have spoken to people who took the risk on this company at 2, 3, 4 cents and share prices up significantly. Good work. We're all here to make money. I think that was a brilliant decision. But I think for investors who are looking to invest any kind of large amount of money, Avocor is a scary place, because how do you trust them? It's very hard. They have to rebuild their trust, right? CYM.V just announced nuclear. Oh, everybody's going to be excited about nuclear these days again, right? Uranium becoming popular again. Cymat Technologies. This is a 13-cent stock. Share price down 27% in 1 year. A lot of companies are. You got yourself a little nano cap here at less than $9 million. And so what do they do here? Is it going to be pre-revenue? $8 million market cap. Now they make a little bit of revenue. Okay. So $3 million of revenue. A lot of growth. That's what this is talking about. 4.9 million of debt. Looks like they need cash. I don't know. I've never looked at them. Don't know anything about them. So not much I could say there. But you know what? I will say that for some reason, I've been drawn to some nano caps recently. And I think that's because I've been so hesitant in this market to invest big in some of the larger microcaps, because like we've seen from so many of these large microcaps like McCoy Global going from, they went from 240 to 374 and then they pull all the way back to 310. So it's really hard to get excited about investing in some of these larger microcaps when they go up and then they come down, even though the earnings are great. So I have found myself, I get bored and I have found myself drawn to a few little nano caps lately, just to keep myself interested in the market and keep myself watching and paying attention and excited and looking at stocks every day. by buying fun-sized positions on some of these nano-cap stocks, right? Keeps you interested. Saw Anduril making an acquisition of an Irish company. They do business with Kraken. I don't know if that could mean Anduril will do more acquisitions, but something I read today. Look, that's join the club. There's a whole club of people expecting that. A lot of people that bought Kraken, own Kraken, are still buying Kraken Robotics, are sitting here waiting for that $5-6 buyout of Kraken Robotics from Anduril, right? So that's something that we'll be looking at. Oil took a massive dip. Yeah, oil's could go lower. It's interesting again because you look at the macroeconomic situation. I remember reading not long ago, November, December of 2024, oil analysts saying, look, oil's stable. We're expecting a price of oil between about $72 and $80 for the year 2025. And it was like every analyst. There was like not much deviation, right? Everybody was expecting, $75 price of oil in 2025. $57 today. So it's really hard to trust the macroeconomic analysts and their predictions. Chinese tariffs benefit Indian solar manufacturers. ACU.V is getting lots of business with manufacturers in India, Middle East, and Europe. That's good. It's still solar. I'm still biased against certain companies, so maybe I'll take a look. But so one of the histories of me is that one of the first microcap stocks that I ever crushed it on was Canadian Solar. So I'd been a microcap investor for a couple of years, and CISQ, go look at CISQ, Canadian Solar. I didn't really know what I was doing yet in microcap stocks, and I bought for around $2.50, something like that, Canadian, for CISQ. I believe that was 2012. And I sold it for around $13, $14 in 2013. Made a pile of money, and it went up to $40. So Canadian Solar was an interesting learning experience for me between 2012 and 2013, where I really cut my teeth on microcap stocks back then. It's created some bias for me in solar stocks because Canadian Solar went from $2 up to $40, and then it crashed back down to like 10. So some of these solar stocks are so fragile in the macroeconomic situations that, again, the shipping logistics, if you're right about, Indian solar manufacturers getting tailwinds and, financially a more stable place, and they're going to get more of a bull market because of the Chinese tariffs. If you're right about that, you could make a lot of money. It's also very high risk. But I mean, that is the point of microcap stocks. Do your research, do deeper research than every other investor, because you're deeper into that one than me right now. I've never heard about it. And make sure that you know exactly what's going on with that company. Is there in owning CNO, if you already own OmniLight, how interconnected are they? I know Omni holds a sizable part of CNO. Yep, that's the other thing I should say. I'm not that interested in holding CNO. It's been very, very volatile. California Nanotechnologies. I've bought them and I've sold them, and I've made money on California Nanotechnologies over the past 18 months. They've made me money, but the crash from $1.95 down to 50 cents, the headwinds, the macroeconomic headwinds that they have. I'm a shareholder of OmniLight Industries. OmniLight Industries owns, I thought it was 6.9 million shares of California Nanotechnologies. Something tells me, I remember listening to their earnings call, and their chief financial officer said that they own almost 7.1 million shares of California Nanotechnologies. I would need to go double check that, but they own a shit pile. Somewhere between 6.9 million and 7.1 million shares of California Nanotechnologies is owned by OmniLight Industries. OmniLight Industries has like $3.8 million of cash, no debt, 7 million shares of California Nanotechnologies, and their share price is cheaper than California Nanotechnologies. So I own OmniLight, and by owning OmniLight, I own shares of California Nanotechnologies. So I don't know why more people don't do that. The only thing I was frustrated with OmniLight because they were selling shares of California Nanotechnologies at $1.25, $1.35. I didn't think they sold enough. They should have sold more. They were trying to be too nice because these companies literally, California Nanotechnologies has moved into a larger space, but their previous space is side by side with OmniLight. They used to be the same company, and they split up into two companies years ago. And that's why OmniLight funded them, and that's why they own so many shares. I wish OmniLight sold more shares of California Nanotechnologies when it was at a higher share price. But still, they sold a few. They got a little bit of money out of it, right? Small cap, oh geez, I'm not taking a look at that one now. I like REITs. I do like REITs. I don't know. I've got to take another look at REITs, simply because with Mark Carney as Prime Minister, what's going to happen with them moving forward? It does change the investing philosophy a little bit there. But the problem is that REITs takes a long time to research, right? And then Steven is saying that NXLV is not a REIT. So I don't know if that one's a REIT or not. You're saying it's a REIT, not saying it's a REIT. I like REITs, but I would have to sit here for an hour to look at a REIT. Not a REIT structure. Thoughts on PNG.V earnings and how they will do in 2025. I had a previous picture up here of a crystal ball. That's about what I would have to look at. So PNG.V, I'd be speculating on. It's Kraken Robotics, of course. Look, I still like Kraken Robotics. On my paid Patreon Discord, it's still number one on my list. And people ask me, is it still number one on your list because it deserves that spot in the future? Or is it number one on your list because it's been one of your more successful stocks over the past couple years? Like, a lot of people discovered my channel because Kraken Robotics was one of the stocks that I covered a lot. It was like one of the highlight number one stocks on my channel. And it went from, 30 cents to basically $3. So that got people's attention. But I have to say, every time I look for flaws in Kraken Robotics, I can't find any. I mean, it's almost damn near the perfect company. There's things that I don't like about it, in that Kraken Robotics, because it works with the military and because they have so much institutional support now, they don't really communicate with retail investors anymore. So it's really tough to ask me how they're going to do in 2025 because I don't know. Retail investors simply don't get as very much information anymore from Kraken Robotics because they're not telling us. The military contracts they can't talk about. If they're working with companies like Anduril, they can't really talk about it. And they speak, when they do talk about, give out information, it's mostly with their institutional owners, not us small retail. So some of it's speculation. They have put out some outlook, which definitely helps, but there's just so many ways that this company can succeed into the future, right? I love the underwater ocean space. Forget about their earnings. I really like their recent acquisition. It's really pushing them to be a one-stop shop for anything you need in the ocean. So if you think that the ocean is the next frontier, which I do, I think there's going to be a lot of money spent on ocean exploration over the next couple decades. Find me a company better than Kraken Robotics for commercial ocean exploration, for military ocean applications. There's not a lot better out there. The potential of a buyout. There's just so many ways for Kraken Robotics to win. I don't think it's got the growth potential that it used to have. I mean, it went from 30 cents to $3. I don't think it's going to go from $3 to $30 in the next couple years. Like, we're not going to get that same expansion. But I mean, it's still at the top of my list because it still has potential to put out, $600 million a year in batteries. And that makes it a $6 stock. And how many years away is that? Even if that takes, say, 4 years to get to that $600 million in revenue from batteries or whatever, it's still really good returns potentially on Kraken Robotics. So limited downside and still some good potential upside. It's not really a microcap anymore. That's why I don't talk about them as much, right? Do you know anything about Monumental Energy Corp? Nope, sorry, never heard of them. Energy companies, I don't. We have other people in my Discord that talk a lot about energy, but not myself so much. One of the things that's stressful with some of these companies, Monumental Energy Corp. Yeah, that's why even with oil and gas, like you notice, I don't invest in a lot of oil and gas companies. I end up with these oil and gas service industries like Enterprise Group, like McCoy Global. Those are the types of companies that make me money. You know, it's the old saying that during the gold rush, it wasn't the gold miners that made the real money. Every once in a while, one of them would strike it rich, but it was extremely rare. The companies that made money in the gold mining days were the companies selling shovels, clothing, and other commodities, right? So I'm not huge on chasing oil and gas stocks around. Down 22%, they had a big spike. They came down here and leveled out. And again, interesting that, you know, people like me are looking at a lot of these nano cap companies, $4.35 million for Monumental Energy and a 7-cent stock. So no, my apologies. I don't know anything about them. Exploration stage company, and that's probably why, because I don't cover a lot of junior oil exploration companies, especially with the price of oil and gas going down right now, or at least the price of oil. So not really my circle of competence. An hour and 20 minutes into this live stream, I think I'm all talked out. I appreciate everybody being here, especially, you know, challenging times. Today was a good day. Hopefully it's the start of good week. Hopefully it's the start of, you know, some of these deals getting made and some of this tariff and, tariff and trade war and global trade war and global economic recession and global meltdown and changing world economy. Let's get rid of all that stuff. Let's get back to some normalcy here and start to see some bull markets. S&P 500 just set a record. They had the best run since 1975. Can we get the same run in microcap stocks in the next month or so? I would love to see that. So I'll see you again in a week. I'll try to make a video on a new stock here this week because I've been a little bit behind thanks to Planet Microcap. So as always, I appreciate your time and I'll see you again next Monday.